Hello everyone, my name is Adam Livingston and I am your #1 source for Bitcoin and Bitcoin Treasury company analysis. Picture this, GameStop, the corporate equivalent of a strip mall spirit Halloween, stumbling into Bitcoin like a hungover frat bro who crashes a black tie gala and calls it networking. They scrounged up $1.5 billion, thanks diamond-handed meme traders, then barely spent a third of it on actual Bitcoin. That is the fiscal bravery of a teenager loading $7 of unleaded into a stolen Dodge Neon before a police chase. Meanwhile, Strategy is guzzling whole tanker loads of sats, Metaplanet and Smarter Web Company are nimble assassins, and GameStop is waving a Funko Pop from the caboose yelling, "Save me a seat, guys." Their customer base, the same people who bought Call of Duty on disc in 2025, and wonder why the TSA is confiscating their vape pens. Today, I'm going to show you slide by painful slide how GameStop transformed from a once-in-a-lifetime treasury opportunity into the fiscal equivalent of trading your last Bitcoin for a package of moldy government cheese. By the end of this presentation, you will understand why conviction prints money and hesitation prints sad Reddit posts. Alright, let's autopsy the comedy of error. GameStop raised $1.5 billion in 0% convertibles, then spent $513 million on 4,710 BTC. That is a 34% deployment ratio. In Quantland, we call that suboptimal capital efficiency. If they had pushed the full $1.5 billion into Bitcoin at the March average of 85K, they would be sitting on 17,600 BTC today. The missing 12,890 coins now represent a $1.4 billion opportunity cost at current spot. Almost the face value of the notes themselves. Brilliant. The executive summary is simple: underdeployed capital, overpromised narrative, zero premium compression roadmap, and a dilution bomb ticking louder than the power supply on a refurbished Xbox 360. Welcome to the show. Let's zoom out from GameStop's amateur cosplay and remind ourselves why adult table CFOs now keep a Bitcoin tab open next to their Bloomberg terminal. The US dollar's M2 has ballooned 46% in 5 years. That's the monetary version of a Krispy Kreme hot light. Bitcoin, meanwhile, is hard capped at 21 million. It's the only assets where the board can't wake up, issue more units, and pretend they've discovered synergies. Quant takeaway, supply variance equals 0. That collapses long-run terminal inflation risk to a rounding error. There's Treasury immunization. For every 100 basis points of unexpected CPI, corporate cash loses roughly 9% of its real purchasing power over 10 years. It's actually way more than that, but you know, government's lies. Stick 10% of reserves in BTC, and historically, you slash that duration-weighted bleed by 2/3. It's portfolio immunization without begging the Fed for real rates above 0. Bitcoin's 10-year compound annual growth rate still clears 60% with a post-halving sharp that humiliates the S&P faster than a McFlurry melts in July. You're buying a perpetual call option on global monetary recalibration for the price of 1/4 share buyback vanity project. GameStop sprinkled Bitcoin onto its balance sheet like a garnish on a cold Hot Pocket. It's the corporate treasury equivalent of licking a 9-volt battery and calling yourself an electrical engineer. The bottom line, Bitcoin is not a meme stock accessory, it's a balance sheet exoskeleton. Adopt it with conviction or get swept aside by the companies that do. Alright, it's time to relive the slow-motion car crash by Glorious Frame. March 2025, the big brain board meeting. Gentlemen, we're gonna be a Bitcoin company. Cue a unanimous vote, champagne pops, and the CFO sprinting to issue $1.5 billion of 0% convertibles, because nothing says conviction like borrowing free fiat you plan to touch anyway. Capital capacity check, March average BTC price 85K, 1.5 divided by 85K equals 17,600 BTC. That haul would have leapfrogged Metaplanet on day one. Remember, those missing 12,890 coins now equate to 1.4 billion of foregone asset convexity. Basically, the entire face value of the notes they issued. Chef's kiss. May 19th, 2025, reality shows up. Instead of 17,600 BTC, management waddles in and grabs 4,710 BTC for around $109,000 each coin, lighting $513 million on fire and leaving 66% of the raise to marinate in Treasury bills. Translation, they paid 34 cents of every dollar to buy an asset that historically returned 60% CAGR and left the other 66 cents eating Jerome's new super hot 5%. That's ordering a Wagyu steak and eating the parsley garnish. If they had DCA'd the whole bag back in March, today they'd be up $700 million mark to market. Instead, they're bragging about strategic flexibility, while their unused cash bleeds 8% inflation per year. Fantastic! The takeaway is that GameStop treated a once-in-a-generation Treasury arbitrage like a clearance bin Funko Pop. Bought one, left the rest, and called it diversification. This is not capital allocation, folks. It's cosplay finance performed in the food court of monetary history. Welcome to the part where Wall Street and crypto Twitter fused into a single disgusted eyebrow. Announcement day, the stock dead cat bounced 12% on meme fumes. Within 5 trading sessions, it cratered 11% below the pre-news close. Net result, a 24% round-trip whiplash that left Robinhood traders feeling like they've been waterboarded by Mountain Dew. Implied vol ripped from 78% to 115%. They mean reverted harder than a Dogecoin Vegas bachelor party. There was a lot of social media backlash. Ex-influencers dubbed the buy pathetic, non-committal, and my personal fave, window dressing on a burning blockbuster. One hedge fund parody account posted GameStop's BTC stack next to Strategy's annotated simply, "Dude, where's my coin?" Coin traded under $90,000, 18 separate sessions between January and March. The average cost basis they could have locked in was $85K, not $109K. That timing error alone vaporized $315 million of notational upside, roughly equal to GameStop's entire 2024 operating loss. Imagine showing up to Costco the day after the free sample cart leaves, then bragging about the full-price meatballs you bought instead. Activist sharks smell fiat in the water right now. Strive Asset Management filed a 13D the next week demanding a material larger allocation. Translation, dear board, either buy more Bitcoin or we'll replace you with a toaster that auto-clicks Swan DCA. Internal leaks suggest half the directors fear Bitcoin volatility, the other half fear Reddit volatility. Guess which one moves faster? Ryan Cohen vibe check. At Bitcoin 2025, he muttered, "If the thesis is correct," and the room audibly sighed. Sailor would rather staple his tongue to a lightning node than utter an if clause about Bitcoin. Markets heard that conditional, priced in zero conviction, and hit the sell button like an old treadmill on Facebook Marketplace. Capital markets are a polygraph hooked to your balance sheet. When you allocate timidly, the ticker tattles. GameStop tried to borrow Sailor's swagger, but the secondhand suit still had the price tag hanging off of it, and the market roasted them accordingly. Let's put the 3 contestants on the dissection table and watch the vitals bleed out in real time. GameStop waddles in with 4,710 BTC, basically a tip jar at a Miami Bitcoin conference. Bought for $513 million. Strategy barrels through the door like a Cyber Bowl elephant, 580,250 BTC deep. $40.6 billion committed, a capital body mass index so high the CDC would just give up. Metaplanet glides in samurai style with 8,800 BTC on a shoestring budget, roughly 856 million cost basis, and yet still outclasses GameStop's efficiency by a factor of 3. Convert those stacks to coins per billion deployed and the numbers do the stand-up routine for me. It's like watching 3 sprinters where one is Usain Bolt, one is a disciplined Japanese track star, and the third showed up in Crocs, wheezing, asking if the race came with bathroom breaks. Capital markets notice, folks. Strategy has skyrocketed 2,800% ever since Sailor first uttered the words scarce digital property. Metaplanet, a literal nanocap last year, popped 138% simply by saying, "Hi, we have a plan." 12% sugar high on announcement day, then an 11% face plant once traders realized the plan was just a cardboard cutout of a plan. That's not premium compression, that's premium evaporation. PCV in reverse, velocity straight to zero. Bottom line, one company is a Bitcoin black hole, one is a precision-engineered yen to sats pipeline, and one is an aging meme stock trying to cosplay as both while still asking mom for gas money. The markets know which is which, and so do we. And if you think the Bitcoin side quest looks bad, wait until you meet the main campaign. GameStop has shuttered 960 stores in 2024, bringing the grand total down to 6,670 in 2010 to 3,203 today, a net euthanasia of 3,467 retail husks. Same-store sales are down 28% year over year. Customer growth is the financial equivalent of a tumbleweed, and the only foot traffic they're attracting is mall walkers using the empty floor space for cardio. Digital downloads have eaten the disc business. Cloud gaming is steamrolling used hardware, and every 12-year-old with a PayPal account can buy skins on Fortnite without ever touching plastic wrap. Bitcoin was pitched as the hard pivot, but instead of a strategic somersault, it became a magician's misdirection. Look over here at the blockchain while our core business quietly bleeds out in the food court. They're burning meme stock equity to keep the lights on, and now they've parked the bulk of their fresh capital in T-bills, earning 5% while the operating costs inflate at 8%. This isn't a hedge. The brutal truth: you cannot fix a collapsing brick-and-mortar empire with a dab of digital gold, especially when you're only willing to buy enough to fill a Ledger Nano and a half. Let's crack open GameStop's balance sheet and listen to the faint beeping of corporate life support. They're sitting on around $4.78 billion in cash. Impressive until you realize it was conjured by meme stock mania. Not anything that smelled like operating profit. In fact, they've clocked negative operating income every year since 2018, culminating in a 2024 shortfall big enough to buy every Funko Pop ever made and still have change for a used Ninja air fryer. At 5% T-bill yield, that war chest spits out about $240 million a year, while 8% inflation devours $380 million in real purchasing power, so the Treasury strategy is literally losing $140 million a year annually before anybody even boots up a PlayStation. Meanwhile, strategy pulls six-figure Bitcoin onto the balance sheet and watches fair value gains yank GAAP net income into the stratosphere. Metaplanet arbitrages zero coupon yen like it's an infinite money glitch. GameStop borrowed fiat at 0% only to park 2/3 of it back with Uncle Sam at 5%. Monetary yo-yo dieting of the highest order. Don't call this capital preservation because it's a cash-rich coma. Now meet the cast of characters steering this cruise ship through an iceberg field with the headlights off. Ryan Cohen, Reddit's chosen one, takes the stage at Bitcoin 2025 and utters an immortal hedge. If the thesis is correct, that single conditional shaved $1 billion off market cap faster than you can say power to the players. Contrast that with Michael Saylor, who treats every microphone like a revival tent and declares Bitcoin is digital capital, then promptly mortgages the furniture to stack another 1,000 coins. Over in Tokyo, Simon Garovich calmly hands investors a spreadsheet labeled 100K by 2026. Inside the GameStop's boardroom, it's civil war. Legacy directors clutching pearls about volatility. Middle managers wondering if proof of work is an HR policy. The result is strategic paralysis. A leadership team that wants Bitcoin's halo without enduring its volatility baptism. In other words, the Titanic's orchestra is arguing over song choice while the hull is already underwater. Flamethrower time strategy proved the template. Borrow fiat, vacuum sats, compress the premium, repeat until CNBC cries. Metaplanet proved you can do the same thing in a kimono with zero coupon yen and still beat the stock market. GameStop proved you can raise a war chest and then hide it in risk-free assets like a kid who takes Halloween candy to a dentist for safekeeping. Their so-called Bitcoin strategy is the financial equivalent of ordering a 64-ounce Slurpee and bragging that you're hydrating. Meanwhile, their customers, grown adults trading Funko Pops like their T-bills, are tweeting diamond hand emojis with their beloved stock, quietly reverse splitting their net worth. It is performance art, except the ticker price is market capitalization and the exit doors are locked. Here's a fun little visual for you on BTC accumulation efficiency per dollar. I know there's only one buy from GameStop, but still this goes to show what sitting on your hands looks like. Bitcoin is a once-in-a-generation capital exoskeleton. Strategy welded it to their core and became a gravitational singularity for institutional money. Metaplanet strapped it to a bullet train and turned negative real rates into a Satoshi printing press, GameStop stuck a BTC sticker on a broken cash register and asked for a standing ovation. Their customers will still keep lining up to trade dusty game discs while the corporate treasury leaks real-time purchasing power into the inflation furnace. End result, 2 companies rewrote corporate finance textbooks, 1 company doodled in the margins with a crayon. And that, ladies and gentlemen, is why conviction compounds while cosplay combusts. My name is Adam Livingston, and if you found this eulogy on GameStop helpful or entertaining, please like this video and subscribe to my channel in order to support my work. Leave a comment with what you'd like me to cover next. Class dismissed.